Hey there, good people. We are covering the last stock in my Big Tech Stocks to Buy in 2024 series. This is the last but not least, Alphabet, aka Google. We're going to talk about where it's been, where it went, and where it's going next. In November of 2021, this stock, we all know, hit a high of $150. There was some guy left buying at the very top because in the course of the next year, in 2022, it fell all the way down to $83. And when it was $83, I was actively swing trading this stock, and I know people were afraid to buy, even though that does appear now to be a perhaps once in a lifetime opportunity. Since then, we've had a full V-shaped recovery on Google stock. A lot of people would not have imagined that we could get all the way back up here to $150. And today we are sitting right below its all-time high of $152. We've been moving around the 151 range, and we did get a confirmation because we got above 149 of a breakout. And let me explain to you guys what that looks like. It means that there is little to no resistance in the price above where the stock is currently sitting. And so even though there's probably interest on the part of smart money to take profits, to lock in some of the gains on this incredible run-up and this lofty price, they also know that there's probably going to be what's called a blow off top. And that's what a lot of big techs are looking at right now. We see something like that happening perhaps with Nvidia today. So this stock, even though it's run up all the way back to all-time highs, and a case could be made for locking in profits, the fact that we might close today above $151, that tells us this stock is not ready to go down just yet. But I'm going to break down some interesting news stories on it. I'm going to review the bulls and the bears because we don't want to lose track of what either of them think. Don't want to get too bullish or too bearish. When we take the time to look at both sides of the story, we get a better, more realistic perspective. And then we're going to go into the charts to refine our strategy. This is the Stocks with Josh show. Thank you guys for joining me today. Thank you for those who already hit the like. Hit the like to feed the algorithm. Say hi, throw a heart in the comment, and hit the subscribe to get the next video in my upcoming series that specifically focuses on Bitcoin, altcoins, and the minor stocks, as well as coin stock, which is one of great interest right now. That'll be my next series. Hit the subscribe to get those videos. All right, let's just start things off by looking at some interesting news stories. The first one I want to bring to your attention, I believe, is a bullish news story. Sundar, the CEO of Google, warns Google staff that there are more layoffs coming. So here's what I want you guys to understand about this. Wall Street always views employee cuts from big tech companies as bullish. It's not a bearish sign that they're suffering. Everybody knows these guys are sitting on a mountain of cash. What they're trying to do is free up some of that cash and protect profit margins so that they can continue to invest in innovation, specifically the area of AI. And so every single time they come out and say, we're tightening the belt, that gets Wall Street excited. In particular, the CEO was quoted as saying that the company had to make some tough choices to meet its ambitious goals. Wall Street will view that as bullish. And then we actually had some breaking news on Google today, even though it didn't hurt the stock. Update, Alphabet's Google terminates contract with AI firm Appen. Their AI experts were credited with training the chatbot Bard. The bottom line is the stock did not drop. It could be that that's bearish news, but the bulls just can't be slowed. Let's take a look real quick at what the bull case is for Google right now. The bulls say that this cash cow search business is still number one, that the 1 billion users making up 91% of that market share are still moving strong. 2023, they say they made $77 billion. In 2024, looks like they're going to make more. Their cloud business is still growing. The bulls say that Alphabet's AI Gemini is absolutely in the number one spot, way more powerful than ChatGPT. Android phones used throughout the world are just pushing more global customers towards their search engine. So ultimately, they say this is a cash-strong business that has the ability to focus on innovation for years to come and long-term growth to stay ahead of their competition. Well, the stock price seems to support the bull case, but let's take a minute and consider what the bears would say about all of that. The bears' concern is that it's a monopoly that's going to be deconstructed by regulation, that their search business, as I just said, with 91% market share is absolutely ripe for competition, and that AI is actually going to be Google's downfall. It's going to be the Google search monopoly killer. In addition to that, they would argue that Google is overspending, betting precious capital on high-risk bets that will take years to pay off, and this business with little diversification of revenue is going to come up against increasing competition each and every year ahead. Its best years are behind it, is what the bears say. Well, this epic battle between the bulls and the bears is going to come to a head on January 30th when we get Q4 earnings, and that's when we're going to find out whether or not this thing has been priced for perfection. We know that the market is expecting year-over-year increases in their earnings. Specifically, they want to see $1.60, which would be a year-over-year earnings growth of 52%. They also are expecting a higher revenue of $70 billion, which would be up 12% year over year. Bottom line is that come earnings to continue to go higher from here, which almost looks like a blow off top. I'm going to point out to you guys in a minute when we get into the fib that we've entered the golden pocket, which is typically an area where stocks reverse. I'm not calling this down right now. We're going to let this charts speak for themselves, but what I am telling you is that for us to break all the way to the top of that golden pocket channel, we're going to need a shock and awe beat of revenue and earnings per share, because a lot of success has absolutely been priced in, and that's why the stock has been climbing. So before I get into that, let me do a quick station break for the Moomoo investment app. Guys, if you need better trade tools, check out the offer from Moomoo. They're a zero cost to trade platform available in the US, Australia, and Canada. And here in the US, if you click on the link, you can get the full details about their offer, where you can receive up to 15 free stock. And for first-time customers, they'll give you 8.1% interest on putting cash in the account for 3 months. You don't even have to take a risk. You can just sit your money in there and get a guaranteed 8.1% for the next 3 months and get prepared to buy the dip in 2024, which is probably going to take 2 to 3 months to play out. So click on the link and get your free stock, put your cash to work, and start trading with better trade tools. All right, let's look at some of the technicals. First thing I want to start off and point out to you guys is that the sentiment is in extreme bullish phase, which often is referred to as extreme greed. We are at the top of the chart, and so we want to pause and we want to acknowledge that. We're above all the moving averages, and so the trend, if you're wondering what the trend is, it absolutely is up. It's a bull trend, so you want to go with the trend right now. So once we crossed above 150, the next area of resistance above is around $158. We're looking for a blow-off top, and so I don't have blow-off top candles to show you, but I'm going to remind you guys what they look like. They're candles with a small body or no body at the bottom and a really, really tall wick at the top. It means that the price moved up quickly but then got rejected quickly. It's called a rejection candle, and once we've gotten above all-time highs, we're going to watch these candles day after day until we see one that looks like a rejection candle. Now, I'm in a Google swing trade right now, and I'm expecting to take profits around 155, which is an area where I see light resistance in the golden pocket at the moment. So are the charts giving us some bearish signals? Let's look at that. So we've got volume to consider. Now on Tuesday, the stock price went up $1, but it went up $1 on negative 33% volume. And today we went up $2 and we went up on negative 21% volume. And so that's basically a bearish divergence. It means that the up move is not being met with the same volume of interested buyers. The volume of buyers is slowly decreasing, even though the stock price is going up. It can continue in that trend for a while, but you want to take notice of that bearish divergence. I also want to remind you guys of what a typical pullback for Google stock looks like. Typically, this thing can pull back and make a swing low around a negative 14%. If we were to get that at today's prices, it would put us at around $130, which happens to work out as being a strategic area of support. So keep that in mind. And then we want to look at the momentum indicator, the RSI. Does the RSI have bearish divergence? Actually, yes. The last peak of buying strength for the RSI was back in May of 2023, which means that ever since May of 2023, this has not been going up on the same level of momentum. What you want to recognize there was it was back in May of 2023 when a lot of the institutional or smart money buyers flooded in. Now, they're not selling just yet. They're going to wait for the perfect and ideal time to sell and take profits, and they're going to wait for this thing to get fully run up, and that's when they're going to sell into a great and successful earnings, which could be right around the corner. And just like the bulls are targeting an up move to $155, and I'm in that camp, there's a bunch of bears who are preparing to take a short position to get all their profit with this thing going all the way down, and their target is 133. So they're looking to enter their shorts at around 155, maybe 158 if they're conservative, and they want to see the stock pull all the way back to 133 to realize big profits. If you dive into the options, you see a significant delta volume imbalance. You say, Josh, what's that? It basically means that everybody's going long right now on Google, which is a good sign. It tells you that you're trading with the trend. But whenever you get to this place where it's significantly imbalanced, it's often an early signal that a reversal will be next. And back in 2021, when this was last at $150, one of the things that we noticed then was there was a ton of insider selling, right? And when it was in 2022, when we were down in the 80s, we noticed a ton of insider buying. Well, we're back to the place where the insider sellers are double the inside buyers right now. And all of that's a little bit tricky to look at because sometimes when you're looking at those figures, it's based on automatic pre-planned sells and buys, but whenever you see it double one way or the other, it tells you that there could be a reversal coming. And so the last chart I want you guys to see is the golden pocket of the fib. This is a fib trend-based extension. What I want you guys to know is that when stocks are in an uptrend, they typically come to an end within the golden pocket. The top of the golden pocket is $158. The bottom is $151. We have crossed into the golden pocket today. And a lot of times you'll find a lot of momentum because it's very bullish. If we can close in that golden pocket over the next couple days, that's very bullish and you'll see more move higher. But the way that a lot of traders trade this is they wait for it to come out of the golden pocket, signaling that the reversal has occurred, and take a short position down. Now, the levels of support beneath the golden pocket right now is $144, and then beneath that, $133. Most seasoned traders will be looking for a mid-range run-up pre-earnings to $155 as a possible area of early profit taking. I would be one of them. And then they're going to be again watching for those rejection candles and a move back possibly to 133, where they would add more shares and go long to the end of 2024. So the bottom line is that Google, I think, is a well-positioned company with a ton of cash that's going to do great with AI. And so I think it's a company that's worth owning and adding to in 2024. And I would call it a buy the dip. I particularly like the 133 price range as an overall area to go long again. And I think that it's getting kind of frothy up above 150. But today's move and a close on the day's candle would indicate that we are going higher, and it's following big tech companies like Nvidia that are just simply going straight up at this point, and we are looking at potentially a blow off top, and I think after that we could see some consolidation all the way back to March. That's kind of what I think will happen with Google. In the next 2 weeks, a lot of retail is going to get wrecked. They're going to be buying these blow-off tops in all of big tech the same exact way they did in 2021. There's no stop losses set. I see a lot of people in the Discord commenting that they bought DWAC at the top. DWAC was an extremely volatile stock, and if you weren't in it below $20, you probably had no business buying it above $40. And it's not to say that it can't go higher, but it's all about timing. I would ask all of you to stop and consider what is your investment and trade strategy. Are you putting only minimal amounts of money in these high-risk plays? Do you put the majority of your investments in good long-term assets, diversified into ETFs? There's nothing wrong with day trading, scalp trading. I do it every single day, but I do it according to some very strongly set rules. But I know by reading comments out there that there are folks who are simply doing it with all of their money, their limited pot. They're blowing their account, and then they don't have any money to invest or trade in. They get discouraged and they walk away from Wall Street, which I think would be one of the biggest mistakes potentially of their life. I'd love to hear your guys' thoughts in the comments section on all of this. As always, thank you for joining me today. Hit the like if you've made it this far. Hit the subscribe to get the next video in the crypto series that's coming up. We've got Tesla's earnings here after market close, as well as the fact that I'm going to be on Keenan Grace's live tonight. The Stock Squad will be reacting to Tesla's earnings. This will be a great show. Don't miss it. That's coming up at 7 o'clock Eastern time. Again, thanks for joining me. Peace and blessings. Take care.